Hi, Jerry.
Hi, Kim. How are you today?
I'm well. How about you?
I'm great, thanks.
Good, 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 good. So, how did you enjoy the eclipse yesterday? Did you get a chance to look at it?
I think no.
I couldn't find my glasses. I just knew I could put my hands on them and I couldn't, so I didn't risk it. I didn't want to take
I didn't
any
want to go
chances.
blind.
But it was a big deal. It was a bigger deal than I thought it was. Everybody was ranting and raving over it. So, anyway, I don't know why I brought that up. Welcome to the Kim and Jerry podcast.
Yeah, that was an interesting segue. By having a solar eclipse, does that make buying notes easier or harder?
Oh, well, definitely the synergy is in place for everyone to invest in this. Okay.
That's good. Okay.
You thought
That
you
was
were
a
going to
little
give me on that
sneaky,
one.
but
No,
okay. Yeah. Right.
no. Okay. In all seriousness, welcome to the Kim and Jerry podcast. And just want to move forward with some thoughts we were sharing because, we like to key off of what other people ask us and, what seems to be the question of the week. And so the question of the week is, how can you afford to buy notes? So before we get started, I just want to give our disclaimer. We are not attorneys or CPAs or what's the other one? Financial planners. Um, but we are, experienced note investors, and we love sharing what we know and hope to inspire others to be able to also invest in notes confidently and share what we've been doing. So today we're going to talk about being able to afford. How do you afford the affordability of investing in notes? Okay. All right.
Cool.
So, where do you want to get started with this? Because I do have some thoughts too, but I'm going to let you go first so you can kind of set the tone and then I'll jump in.
Okay. I guess one of the things about investing in notes, a lot of people think that you have to have a ton of money in order to be able to do it.
Right.
And it really depends on where you want to be, what do you want to do, and so on. Um, I've invested in notes as small as $100.
Mm-hmm,
I didn't win it. I did bid $100. Um,
okay.
I was beat by somebody that bid $400 for that note or something like that. So you can this you can buy notes for as little as a few $100 up to hundreds of thousands or millions of dollars.
Yeah.
They're all over.
Oh.
And a lot of that really depends on, where you're looking, what do you want to spend, and so on.
Mm-hmm, mm-hmm.
So when I first started, I was buying smaller notes.
Right.
Um, and it wasn't and because I was so new and didn't really understand the space, I'd say, all right, I got a couple of $1,000 here. I'm willing to risk that.
Right. Right.
And, you know, at the time, the amount I was willing to risk was really small. So I focused on buying notes that fit into that box.
Yeah. Yeah. And that's a good point about fitting into the box because I think we all consciously or subconsciously have what we call a buy box in mind.
Yeah.
You know, as you know, of course, and I think some of our audience and people, they know that I used to do fix and flips. And so there was a buy box that I always looked at. There were all kinds of houses that would be available to consider, but it was my buy box that I wanted to take on for the purpose of being able to manage the risk, right? Manage the cost, manage what I knew that I could keep from being a situation that may not turn out well, that I could still come out of it somehow, some way, if not on top, but, definitely par, right?
Yeah.
And so, like you, when I first started investing in notes, I don't even think it was a couple of thousand. I think it was 1,900 to be exact, or something like that. But I knew I could. I knew I could handle that if I didn't know what I was doing or it took over or something happened. Knowing what I know today, wow. But there is opportunity at all levels. And I think that's the message that we want to get across today.
Yeah.
And think of it as a buy box, and your buy box can change, right?
Yeah.
It doesn't have to stay that way.
Yeah.
Okay, so I won't take over. Go ahead. Sorry.
Throw it back at me. So speaking of buy box, one of the things that you just mentioned is you start with how much do you want to spend,
Hmm. Hmm.
and look for notes that fall within that category. The other thing that you want to be paying attention to is what's your exit strategy.
Right.
Your exit strategy will also determine how much you want to invest and how do you invest and when and where do you invest.
Right.
We look at what kind of yields and what kind of returns so do we want to get on those really small notes like that. Obviously, I was getting a ridiculously high return on my investment.
Yeah. Yeah.
Uh,
Amazingly. No one tells you that part when you're first starting out, right? No one tells you how that little number turns into a really big number as far
yeah,
as your returns are concerned. So,
that's true. So, what kind of return do you want is really important.
hmm.
Um, you want to also, and we were kind of alluding to this a second ago, look at your risk tolerance and how do you want to manage that.
Right.
You heard me say that at the beginning. I said, well, how much do I want to risk? And it's because I didn't know the space,
Right.
and I thought, well, gee, I'm getting into this, and well, what if I lose all my money? Well, now that I've been doing this for a while, it's sort of like um, I don't think about am I going to lose because I know that I'm not allowed to say this on when it's being recorded, but I've never lost.
Right.
you
Right.
know,
Right.
um,
Right. Never,
so
never say never, but we've never lost,
yeah,
you know?
yeah,
So,
and a lot of it gets back to risk management, risk tolerance. How do you make sure that when you're putting your buy box together, you're buying a note that you are pretty confident will have a positive payoff for you?
right. Right.
So that's something else that was going that goes through our head today, and something that I want to pass on to others as they listen to this podcast.
Right.
Buy a note that you're comfortable with, that you're comfortable that it will pay off and you'll get your money back. How
Right.
do you do that? A lot of that is looking at the discount that you're buying.
Right.
You know, you'll hear us joke about or talk a lot about buying non-performing notes or buying seconds and so forth, or second lien positions. We're buying at a pretty good discount. So in some cases, I know when I bought the note, I was going to double my money.
Yeah.
That was
Right
not,
away.
yeah, it was
Right
the
away.
price I paid said I'm going to double my money.
Right.
So that's something else that we're thinking about as we're looking at, can I afford to buy a note and what am I going to do once I buy that note?
Right.
That kind of leads me into how do you purchase? And I break that down to a couple of buckets.
Okay.
One of those is I look at if I'm going to buy a note by myself.
Mm.
I'm not going to bring in any partners. I'm not going to bring in any friends. I'm going to buy that note by myself.
Right.
And if I'm
Right.
going to buy it by myself, am I going to keep it for long term or short term?
Right.
So if it's a long term horizon, I may look at my tax advantage accounts. So I may look at my solo 401k, my self directed IRA, an HSA account,
Mm-hmm.
um, on my Roth IRA. So I'll look at those types of accounts and look at should I put in a note into those accounts because I'm going to keep this in there for a long period of time and it will allow me to grow. I particularly look at that when I'm looking at non-performing notes
Right.
because the returns are so high. Um, it allows my tax advantaged accounts to grow pretty rapidly.
Right. And
So
and it allows you to be patient as the note evolves
yes,
to when you are investing, through your tax advantage accounts, right? There's
yeah,
no particular got to get this done by a certain deadline or anything like that because, that's the whole purpose of a tax advantage account is to have patient money that's
yeah,
working for you, growing for you. And so this is a great coupling as far as a strategy is concerned in purchasing a note using a tax advantage account.
true, true.
Yeah.
So for long term, long horizons for me, I'm
Hmm.
looking at how do I build capital?
Right. Right.
And buying at a discount, building capital, that allows me to take a note that I built the capital on and use that note to buy a note.
Hmm.
So
Hmm.
when I go back to that $100 example,
Hmm.
so you buy a note for $100, and when you buy it that it's going to be worth a lot more.
Right, right.
And then you take the proceeds from that a lot more and use that to buy another note.
Right, right. That's what I did when I first started
Mhm.
investing in notes. I was trying to get an understanding. I wanted to get my feet wet. I bought this little $1,900 note, and it turned around pretty readily. I think it was like what 90 days or something that it kind of resolved itself. To my surprise, I was like, oh, this is how this worked. Not all of them worked like that, however,
Yeah,
um, but the return was three times what I put in, right? So now I had more money to invest. And
yeah.
I did. I took the whole thing and reinvested again,
Mhm.
and been doing that over and over again. It's sort of like, a compound interest kind of
Yeah,
approach, if you will, because it significantly makes a difference. I mean, you all of a sudden, as little time of, I want to say a year, you can be looking at a much different portfolio than what you
yeah.
started out with,
Agree.
as far
Agree.
as the notes are concerned.
Agree. Totally agree with that, Kim. So long term by myself. That's kind of how I look at things. Um, then I also look at short term again by myself. Um, and again, I will raise cash all kinds of different ways. And, with folks that call us up and talk to us, I can go into some things that ways to raise cash that we can't talk about here because
Yeah.
of time constraints and other things on, on the call or on the tape. But again, I'll use my tax advantage accounts. I'll use my savings, bonuses. I'll sell stuff because there are assets that I have that are not giving me the types of returns that I'm looking for, or I have assets that I can get a better return. I've mentioned on a number of these podcasts that, yeah, I'm selling off some of my real estate, you know, um, because I can get a better cash on cash return by
Right,
selling that, taking the gain, and plopping it down into a note that that will give me a better return. So
right. It's
using
a
cash,
strategy.
yeah,
It's there. It's not oh, this is a nice note. Let me buy this note and then walk away from. There's a strategy that is constantly going on,
yeah,
with your portfolio, as it should be,
yes,
so that you can, you know, reach the goals that you set out for yourself, right?
true,
And notes can definitely get you there.
yeah,
It's not whether it can or cannot. It can. It's a matter of the strategy that you implement to reach your goals.
true.
Speaking of which, I just want to interject was that I had someone call me up just the other day and said, listen, I'm getting a refund check for this amount of money, they told me. And they said, can I buy a note? And I thought to myself, we can buy three notes. So I'm waiting for the refund check to hit so that we could, collaborate and be able to help this new note investor enter into the realm of investing in mortgage notes. So,
And
okay,
that
sorry.
gets back to raising cash in alternative manners.
Yeah, yeah,
The
yeah,
tax return. Didn't
yeah,
think about that. That's another idea.
yeah.
So there are ways to be able to raise the cash to buy a note. And what I want to just kind of keep reiterating is notes come in all sizes. So raising the cash, there are I can give you a lot of ideas, and hopefully through this video, you'll get a lot of ideas about ways to raise cash. But
Right,
now that you've raised the cash, it's, well, what do I do?
right,
And that's kind of what we're talking about here. Some of the strategies of what do you do?
right.
Um, we talked, one of the final things I'll talk about, when I buy notes by myself, I will also buy notes that are performing for the monthly cash flow.
Mm-hmm.
I'll
Mm-hmm.
buy notes to pay my bills.
Right, right.
You
The
know,
payments.
yeah, and you think about that, it's kind of going to sound kind of weird, but if you can take the money to pay the bill and then it's gone, or you can take the money, buy a note to pay the bill, and it's just going to keep cycling every month.
Right,
there's
Right.
more payments. So just some food for thought on that. The other thing about buying notes, and I've talked about buying by myself, but I also buy with others.
Yeah.
And another strategy folks want to be thinking about when you're looking at notes and can I afford to buy a note, et cetera, et cetera, et cetera, is buy with other people.
Right. Right.
Become social. We're
Become,
sociable. You
and
know,
we laugh, but it is really an avenue to become social, to become a network,
yeah,
right? To grow stronger and more confident in this realm of mortgage note investing.
yeah,
I'm a big proponent advocate of community in this
mm,
realm, and the experience of investing with a community is none like it. I mean, and it doesn't take away from me investing on my own if I see something that I want to invest in. But the community is another experience, a whole different layer of investing,
yeah,
and building confidence as well as you know building on your capital to reinvest, right? And so
yeah,
um, that's a whole nother podcast by itself, how that community works, how it can work, why you should be part. In fact, Jerry, can I just give you a little plug here? Aren't you doing a webinar Thursday, April 11th, right, on LinkedIn? And isn't the topic called "Do Not Invest in Notes Alone," right? And
mm,
that
yeah,
underscores the whole
something like that.
community. Yeah, yeah. No, but this is a big deal because it gives everybody an opportunity to understand what this community is about and how it's effective, um and that you I think people can even ask questions on this platform, right?
Sure.
Okay, so here it is. April 11th, at 12 noon Eastern. Jerry is doing a webinar on LinkedIn. So you can go out to our LinkedIn site right now, for Shield Financial, and you can actually register to be part of this interactive webinar to talk about, how to not invest in notes alone. Okay,
Yeah,
that
cool.
that was purely organic. I didn't know that was coming.
Oh, I could tell. Well, that was unscripted.
Sorry.
So no worries. But yeah, but getting back to investing with others, that's how you and Steve and I started working together. It's just,
Yes,
hey,
yes.
um, we could leverage each other's capital to buy bigger notes, to buy, or in our case, not just to buy bigger notes, we bought bigger tapes. So we
Right.
would buy, as a group, we could buy, instead of buying one or two notes on our own, we could buy 5, 10, 20 notes at a time.
And
And
then what happened? We were
that changes
getting
everything.
tapes. They were
Yeah.
coming over the fence like crazy after that. So,
Well, that was the point where people started to realize that First Shield was serious
yes.
because we were now buying 10, 15, how many ever tapes at a time or notes at a time. And yeah, this isn't a hobby.
Yeah, and then we
It's a
started taking
business.
down tapes with
Yeah,
investors, and
yeah,
this has been fun. I mean, this whole journey of note investing has just been a lot of fun. We have a good time,
yeah,
probably too much fun sometimes, but
yeah,
uh, but in all seriousness, it's very effective. And
yeah,
having come from the world of investing in real estate physically, the whole fix and flip and stuff like that, and you can do very well there. Clearly I evolved in that realm, but I love the mortgage note investing.
cool.
So, I don't want to give that up to do fix and flip for certain. That's,
No,
yeah,
I really don't like swinging hammers anymore.
yeah, yeah, yeah. So I didn't swing too many on them, but the headache of having to figure out what to do next and how to get there and don't spend too much money and yada yada yada. So,
Yeah,
uh, but it worked out. But yeah, I think that mortgage note investing for anyone is there for you. You just have to know how to do that approach, right? Because that was the one thing. that I didn't understand when I was first starting out was that, and this is some of the feedback that we're getting back today, is that everybody assumes that when you're buying a mortgage note, you're buying the mortgage note that you see today, the 500,000. It assumes that you're buying the property, that kind of thing, but you're buying the unpaid balance at a discount, right? And there are lots of factors that dictate that discount, and that falls out in the due diligence. And we have a whole podcast on the due diligence, right? And
Yeah,
why that kind of steers you into knowing what kind of discount you need to put on the note that you're interested in investing in. And then based on that discount, you don't really know yet what your end number might be in that in the investment, but what you do know is how much of a discount you got on the unpaid. So from that point, you do know how much you've already uh, obtained as far as the gain is concerned.
yeah,
You know,
yeah.
it's a process, and it becomes more natural the more you do it and the more you understand. But anyone, as Jerry said, even with $100, you can get into into
True,
mortgage note investing.
true.
So,
And as you're thinking about, investing with others, there are a number of vehicles that come to mind that might be of help to many folks. One is a joint venture where
uh-huh,
you are working with other investors to take down a note, to take down a tape. Everybody puts money in, and you use that as the foundation for buying. I'm not
right.
going to get into the details of the logistics of all of that on this podcast, but we may do that in the future on another podcast.
But there's a real arrangement. It's
Yeah,
not loose.
yeah,
To the point that, joint venturing is a serious commitment in
yeah,
venturing to invest with each other.
yeah,
And what needs to be understood should be understood at the time of when you agree to joint venture.
yeah, yeah. There's a structure, and you're going to want to work with your partners on that, as well as your legal partners to help you structure it in a way that makes sense for you.
Right, right.
The other thing that you can do is hypothecation.
Mm,
That's a really big fancy word. All it means is borrow money.
borrow money.
So, with a hypothecation, you borrow money from individuals for a specific note or a specific series of notes.
Right,
In our case, when we do a hypothecation, our partners, our lenders in that endeavor will know exactly which note we're using, which note we're buying that will be part of the collateral file for them. So, by hypothecation, again, you are spreading your risk around. You're getting money at a little bit, you know, better rate for your investors, for your borrowers, but you're also getting money that will allow you to buy bigger notes.
right.
It allows you to leverage your knowledge to be able to acquire notes. So again, another vehicle for being able to do that.
And there's a lot of strategy that goes along with that relationship with the hypothecation, right?
True.
Depending on the type of note that you're investing in, the term that you've agreed upon, and the
Yeah.
strategy and understanding, the exit of that relationship that you have with your hypothecation partner, right?
Yeah.
And so that becomes a whole new level of understanding and relationship and in-depth investing in mortgage notes. And, it is too very fruitful in growing wealth.
Yeah.
So
And, at some point we may want to do whole podcast on
on
hypothecation.
hypothecation, yeah,
You
yeah,
know, so as we talk, it gives us other ideas.
I know, right?
Yeah. The final thing that I want to talk about when I'm investing with others is partials. That's
Mm,
something in the real estate world that I have to think hard about an analogy for a partial. If you own real estate, a partial is like subletting.
right. That's a good way of putting it.
So a partial is where you don't buy the full note, you buy some fraction of that note.
Right.
And the way notes work, a fraction of a note is not necessarily, um, you know, X percentage. It can be, I'll buy half of a note, I'll buy a quarter of a note, I'll buy a third of a note. It could be, I'll buy payments number 10 to 30,
Right.
or,
Right.
or I'll buy the last 15 years of the note, or I'll
Right.
buy the
Right.
first 5 years of the note. It's a plethora of ways to do that, but what it does do is it allows you to participate in ownership of a note at a price that works for you.
Right.
So
And let's talk about it. Right. You just now sold part of your note. You still own the note,
yep,
right? But you sold part of it. What are you going to do with the money that you just got for the payments that you just sold, or the part of the note that you just got? I'm
buy more
just
notes.
talking strategy. Just
I'm going to buy more notes.
yeah,
And
exactly. Because after 10 payments, the note's going to come back fully too. But in the
yeah,
meantime, you've been able to take that money and reinvest it in another note, right?
yeah,
So,
yeah.
uh,
And, you know, why would I do something like that? So I own a note that's been paying me every month for, a couple of years. And I see another really nice note that I want. I don't have the cash today.
right, right,
Well, I'll sell off some of the payments of the one that's coming in for cash today to buy another note that will allow me to continue to grow my portfolio. So
right,
that's kind of why, I would look at a partial, but I can also look at a partial as a way to be able to get a note if I don't have a lot of money as well.
right, right, right.
So buying
They-
these payments for a little bit lower price.
and
So
so this is why the buy box changes, right? This is
yes,
why it's not always fixed. The buy box might be the buy box of the week, and that's it.
yeah,
Because
yeah,
next week the buy box could change,
yeah, and
depending on your circumstances.
true. And that's why right up front we said, you start with how much do you want to spend. When you're selecting your buy box, realize that there are lots of moving pieces in order to be able to get something that you're going to want to purchase.
Right,
Nothing is going to fit perfectly in your buy box. You're going to have to make some compromises, some changes, whatever. But again, this is just kind of how you would come up with the cash to be able to do something or to be able to acquire a note.
right, right. No, this is great. And this is the kind of thing that the community, right, can help out with in regards to taking a closer look. Does this make sense? Look what I'm trying to do here. This is why, let me see. And somebody else says, okay, okay. And then next thing you know, you either have more support, you might even have another JV partner,
Yeah, yeah,
right? Or it helps you know that your thought process was right on spot with what you were trying to do. And
true.
so, again, I am a proponent of investing with the community. So, and for
Cool.
many, 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 many reasons why.
Right.
So,
Well, that's kind of my thoughts today for how do you find the money to invest. It starts with how much do I have available, and no amount's too small.
no amounts too small.
And just be creative in how you're looking at notes, how you're looking to acquire notes. You're looking for large ones, you're looking for small ones, you got partners, tax refund checks, all that kind of stuff all goes into the mix of being able to acquire notes. The biggest thing that I'll say, for me, I wish I'd started decades ago. um, but you know you can't dial the clock back. So let's get started today. So for me, let's get started. Anybody out there that's interested in doing notes, give us a shout and we'll help you walk through the process.
Right. And even if you're just thinking about it and you're trying to figure it out, or you don't know where the money could come from, even if you just want to discuss maybe some strategies, because sometimes things as aren't as obvious, when you're not in it, when you don't see it, when you don't know different dynamics. It's a lot to take on,
Yeah.
especially if you've never been investing in this realm.
Yeah.
But you'll be surprised where you already have money to be able to invest in notes, and how you can make this work. Just getting started is everything. Um, it's not how much you have. It's not how much or how big of a note that you have, but just getting started changes the trajectory of your life of growing personal wealth.
Yeah.
And and it can happen so quickly. Like I said, in a year, your whole picture of where you are when you first start out, it changes dramatically, so that you can see yourself continuing in this vein of investing in mortgage notes. It's really hard to describe. You got to be in it to know it, to feel it, to see it, right?
Yeah.
Experience it.
Absolutely.
Yeah. Anything more you want to share, Jerry?
I think I've kind of walked through all of the high level stuff. It's obviously going to spawn questions, spawn
Yeah.
other podcasts, but I think it was a good topic. It was very timely.
Yeah,
For those of you that like what you heard, hit the subscribe button down below. Um, Hit the like button as well. That's very helpful.
it does,
And
right?
yeah,
Get the
yeah,
word out.
yeah.
Yeah.
If you want to learn more, go to our website at www.firstshieldfinancial.com. You can get some more information as well as schedule a time to talk to Kim, myself, or one of our other partners about notes and what we do and our strategies and so forth. Um, and then finally, you can catch us on, obviously, you're already on YouTube to see this podcast, but we have other podcasts out there as well that get into other intricacies of investing in the note world.
Right. And then again, don't forget about your Thursday live on LinkedIn, where people can bring their questions, and learn more about how to invest in mortgage notes.
Yeah,
It's another opportunity to engage and connect with us, and so I look forward to that. I'll be there April
good.
11th, Thursday at 12 noon Eastern on LinkedIn. All right. Thanks so much, Jerry. I love the Kim and Jerry podcast, and I'm hoping that it's really helping a lot of people out there to be able to um, consider investing in notes. So
Yeah.
thank you again.
All right.
Take care. Till
Thanks,
next
Kim.
time.